Hey there, everybody. Thomas with Basecamp Trading. It is Monday, January 13th, and we're going to take a look here at the stock market. And one of the things we talked about today, which was looking for the indices to climb through the afternoon, push higher, because we said we were somewhat in a risk on market. Now, before we dive into this, don't forget, hit that like button if you could. That really helps us out with the YouTube algorithm. And don't forget to subscribe as well if you haven't already done so. That way you can get alerted whenever we have these new videos that are teaching you about different setups and concepts with trading. So with the S&P here specifically, one of the things we were watching right here is the opening right at 9:30. So one of the things we watched is right off the bat, the S&P shot lower, the NASDAQ shot lower, the Dow, the Russell, actually NASDAQ jumped, but Dow, Russell, S&P all dropped. And one of the things that happened is they sold off and immediately turned around and came all the way back up. And the S&P, the Dow, and the Russell and the NASDAQ all left bottoming tails here. Now, it's even better with the S&P because we had this long bottoming tail that formed a hammer, but we also have what we call around the stops. And around the stops occurs when we break through a pivot low like this, turn around, leave a tail below that pivot low, and then close up in the opposite direction, which is what we did here. And that gave us this bias of, all right, market's unwilling to sell off. It doesn't want to continue to push lower. Look for it to turn and head higher. And one of the things we look for to determine whether or not a market's risk on or risk off is we look for correlations, both positive and negative correlations. So for example, we wanted to see all the indices, S&P, NASDAQ, Dow, Russell, all jumping, which they did. They all had those bottoming tails. And then we wanted to see gold and bonds pushing lower, which they were also doing that. So that tells us, okay, money's coming into the market, it's not going into hedges, and it's a risk on market, which tells us we should continue to follow through. So ended up jumping fairly well, climbed up very nicely, and so far we're still flirting up by the highs here, which is exactly what we expected to happen. Now you can see the same thing happened here with the NASDAQ. We broke through the pivot low, turned around, closed up. And one thing I always tell people is when we are trading, when we look at, for example, the S&P, NASDAQ, Dow, Russell, if we're going long, trade the strongest one. Most people go, I'm going to trade the weakest one, the one that sold off the most because it has the most room to run. And that's the wrong way of looking at it. If we're going long, we want to buy the strongest. If we're going short, we want to sell the weakest. And this is why. You can see the move that we had here in the NASDAQ. It broke out around 90-30 area. And right now we're up 40 points or 45 points almost to the high here. So it had a really nice strong run to the upside. Whereas if you look at like the Dow, which was the weakest today, the Dow has barely done anything. It just kind of fizzled out on that rally. So it has the same type of price movement where we went up, pulled back, and then starting to go up again, but nowhere near as strong and nowhere near as much of a move as we had with the NASDAQ. So again, keep in mind when you're trading, if you're going to go long the strongest market. If you're going to go short the weakest. But that's it for today. I hope it helps. Don't forget, once more, smash that like button and subscribe if you haven't already done so. And until next time, everybody, happy trading.